Hi, I'm Keith McCullough, and welcome to another real conversation. Where today I'm actually going to have my shorts on. Talk about some shorts.
Now I'm disappointed.
Yeah, quite looking forward to my friend and obviously a very popular member of the Hedgeye community, Mike Taylor. Go back and forth on pretty much everything like we usually do. So.
Troglodytes unite.
All
right, that's
thank you very much.
Start it. Let's roll.
Well, you might want to tell people that story so they get the joke.
Well, it was, oh my God, years ago when Keith came into my office. It had to be like 08 or 09. Mm-hmm. And you and your team, which was very small, came in with this idea, with this quads, and your new macro product by Hedgeye. It was novel. And you articulated to me a metric for the economy that nobody had ever thought about or looked at before. And I thought it was unbelievably compelling. And I commented to you that this is how a troglodyte would look at the economic universe. And here we are.
And it's stuck.
Here we are.
You know, it's not what everybody calls me. I mean, some people call me Mucker. Some people use a different letter to start that. And people call you good and bad things too. But you're, we'll get into it. I mean, your performance with Pink. He's wearing Pink, but he runs the Pink ETF. Has been superb. I mean, it's just, you can't talk about it, but I'm allowed to talk about it. I don't know if our team has a chart, but it'll show you the, whatever, 25 to 35% performance gap over, the competitors. The competitors are pretty, I mean, I think, Mike, well, first of all, you're good at what you do. Obviously, you're very good at what you do. But these competitors are just no good. I mean.
Yeah, but that A+ for effort. A+ for effort. And these are some very good people, bright people,
yep.
who I've sat on the table opposite them for 20 years, going to all these medical conferences.
Oh, the actual PMs of the.
Oh yeah.
Absolutely. So those aren't passive ETFs. Those
yes.
are actively managed ETFs.
Yes. Okay. The bottom two on that chart are actively managed by two very, very large shops that you could imagine what
yep.
they are, and they have had a rough 3 years, mm-hmm. and then. But look, I sat opposite these guys for a very long time, and my team did. So we've had a lot of time to understand how they think, what they do, mm-hmm. How they react to things. And Pink puts an incredible amount of effort in not only how to pick winners in stocks, but it's also about what are they going to do with the information they are going to have, mm-hmm. and how can we be positioned to capitalize on that. Mm-hmm. And I did that a lot at a hedge fund. That's a lot what I thought about, especially with benchmarks. As you know, we're in a benchmark world, mm-hmm. and there's only certain things that can be done, given weightings and so forth in benchmarks. And we take great effort and pains to capitalize on that and outflank our peers.
I mean, outflanking with, and we'll get into it later when we talk about some stocks, but what you did with, first of all, what you did with Sarepta and yeah. how you did to this audience for anybody who was at Hedgeye Live. I mean, he basically said, look, you only make that your largest position. SRPT is the ticker. If you think you have the nuts.
Yes.
And I'm like, what? Like, this is kind of out there even for Mike, but you're dead right. I mean, you're actually more right. Were you more right than you thought you'd be in terms of the reaction on that stock?
No, less, believe it or not.
Really?
There is a mindset out there. Well, now they have Sarepta, the company we're talking about. It's the largest position in Pink. And the thought is that they now have a Duchenne's muscular dystrophy drug that costs about nearly $3 million a pop to dose.
Ooh.
And the thought is that, well, in 3 or 4 years, there's going to be potentially other drugs that will come out that might be better. We have no data, mm-hmm. but it might be better. So the worry is that these children who are going to die are going to wait and wait for that next drug. And the reality is that these children very sadly die from not being able to breathe anymore. Their muscular degradation gets to the point where they can no longer operate their diaphragm, and they die. And it's extremely sad, and this is the only treatment available to them. I expect in the next 2.5 years that Sarepta is going to earn more than its market cap in free cash flow. And we will. And when do we learn those sort of things? I believe in the next 90 days.
Wow.
or less. So I think that there's a tremendous amount of upside for that stock.
Like I said, we'll come back to more single stock ideas, but taking this back full circle to how you said, look, these people sat across the table from me. Part of the game is the game inside the game. How did you think about this one or anything in particular that you're putting in there that you can't even find in any of the competing products? And how much of it is that they don't have it yet?
Yes, that is a big factor of what is going to be filtering up into that benchmark, into the indices, that they are going to have to take interest in and start putting it into their books. And I spend a lot of time identifying what those things are. And we'll talk about some of those things today.
Yeah, what's going into the book and also what's coming out of the book.
Yes,
right.
Certainly what's coming out. And as you know, there are a lot of incredible trades to be had in large cap. And frequently the benchmarkers, and you'll see this in actively managed for tech or anywhere else, there's so many that are absolutely petrified of being underweight a large cap component because they're more fearful of being wrong than they are being right. And that's what we really capitalize on, is at what point do they have to act because they don't want to. I had a great conversation with a friend of mine who was at one of these, he's an analyst at one of these large funds, and I had been bearishly positioned on the HMO space, the insurance space this year. And it was because their costs are going up, but their revenues aren't. Guess what happens? You're going to miss numbers, all right? And you're going to have to guide down. And your team and I talked about this on CVS for one of them. And I said, they're going to have to come clean and the stock is going to blow up. And it's still in the process of blowing up. Like, they're going to blow up for a long time. But I talked to my friend at one of these funds and I said, why the heck are you guys equal weight or overweight this space? What are you doing? And he goes to me, well, Mike, I'm not even going to bother trying because they won't trade this. They'll leave it at that weight because they're more petrified of being wrong than they are even trading it. And so it's just, to me, once I understand that information, I'm like, this is free money for Pink. And when I say free money, it's not like we're shorting these names. We're not making money on that. We're avoiding losing money on that. And for a mutual fund, that's just as good because then we still get the outperformance.
Yeah, you're one of my favorite one-liners ever from you. Is my job isn't to be right; it's actually to make money. And can you expand on that? Let's go through like winning, the process, like what you think, winning, losing. You know, because you can be really right and lose a lot of money.
It's a little bit like poker. You get in Texas Hold'em, no limit. You get paid, or you get dealt 2 cards, right? You flip them over. I got 5-10 offsuit, okay? I need to make that hand work like pocket jacks. And that's what I have to do. And that's what we all have to do because you're dealt whatever on the book that you have and you're trying to be right. I need to make that perform like pocket jacks. And so that's what I spend a lot of time on because I'm not going to get every trade right. I certainly don't. But my idea is that I'm always going to be wrong. Every day I get up, everything I do, I'm going to be wrong. But is my wrongness small enough that I can still make money? And that's the goal. Yeah. Can I still make money? Because I'm certainly going to be wrong. But can I still make money anyway? And that's really the dream boat of running a hedge fund or anything in this business, is being wrong and still outperforming. And I constantly seek opportunities where I'm looking at a situation and I say to myself, how do I lose money? And I don't have a good list of answers on how I lose money. And then that usually tells me I need to be a lot bigger in this trade. And that's one thing that we will do with Pink, is that we will be bigger at times in certain bets, ideas, trades, for 2 reasons. Number one, I know they won't, because they can't stomach being wrong. And I also happen to be one of the largest shareholders in Pink. And that money is my money. Much like your book that you run here. That money is your money, and you are in tune and on it every single day. And I think that really helps Pink performance. As you know, I don't get paid for running Pink, and the net fees, let's say the net profits of that business, goes to the Susan G. Komen Foundation for Breast Cancer. But I do benefit as that stock outperforms, I personally outperform, and I love that part about it. And it's actually funny explaining this to the box checkers at these big platform shops that are broker dealers and so forth, and saying like, well, how are your incentives aligned if you're not getting paid? Right, it's an issue because there's no funds that are like this, true impact investing.
Yeah, well, what they don't get is that you're getting paid on your hard-earned capital.
That's right.
That's exactly right, and that's the difference. I mean, it is the difference between what you and I do. If I kind of go back 15 years, like initially being called the troglodyte, like for 15 years I haven't shown my long only, like my retirement account. Now I show it, and you know what it did? It made me better. Because when I start to get it wrong and lose money, I can't stay with being wrong, like in terms of actually losing money. Let's just say when I start losing money, so I've actually gotten a lot better at cutting losers faster and riding winners longer, and that's something that I've personally struggled with for a long time. I mean, a lot of people do, but it doesn't matter. That's my own issue. But just get it off the sheets. Now it's different for me because I'm doing macro, right? Macro, I can go anywhere. There are like 3,000 ETFs.
Yes.
Whereas in pink, you can go anywhere in healthcare, or what you'll define as healthcare, correct?
It's about 80% healthcare.
Okay.
And then I leave an extra room for other weird things that I see that I find compelling.
Yeah.
Like, for instance, we've had a position in 3M because they have a lot of inputs into healthcare. But I think that they're going to have a margin expansion story under new management that's never been done before. So, and it's working. And you will like the chart probably if you pull it up. You'll say, huh, look at that. I also have a position in a plastics manufacturer called PCT. And it's actually pretty big now because it's doubled. So, and I haven't sold any in the book, and I don't think I probably never will, dare I say it. But that's something that's a very, very, very big idea that is very science-y, chemistry, and it fits into this sort of healthcare science-y arena. And so if it's in that zone, I'm looking at it, and I will trade it.
Yeah, the portfolio construction is your process and portfolio construction are two of the biggest factors that differentiate your performance versus the field. I mean, that's very clear. But going back to losses, all right, risk managing losses. Now, a former me, go back 25 years. When I wasn't running the book, I was the analyst. The number one thing that I would screw up was riding losers, right? Justifying the position with valuation. That's where we would start. And over the years, I had learned that valuation is not my starting point. It can augment the view, but can you talk about how you've learned how to lose less when you're wrong?
Well, there are about 5 long theses to investing for longs, and that's it. New product story, NPS, new product story, and you'll see it on my whiteboard frequently up on one of the corners, always to remind myself, taking my idea and sticking it into a category. Where is that category? And the best thing that you can always have is a new product story with pricing power. And then there's for number 2 in the investment long theses is a mix shift / sort of geographic expansion, where you're having existing products that are being introduced into global markets. And then sort of along that is going to be a mix shift where you have a product that is starting to grow faster than the others, and then the mix of the gross margin of the company starts to change. And that is the other one. The next one is management turnaround. Management turnarounds can be dangerous and great. 3M is a management turnaround. Another stock that we could talk about today, Myriad Genetics, MYGN, is also a much hated company. I mean,
they earned it.
It is so bad that it's one of the names I took off my list. The previous management team for decades, and this name was I probably shouldn't say it, but I will. He was the most consummate, accomplished liar that I had ever encountered. I go to meetings with this guy at Myriad, and I could not tell if he was lying. And that's my job. All I did was sit opposite thousands of CEOs, and we'd have a team of people ask a whole bunch of questions. I never asked anything. All I did was look at management and I look at the CFO, and you look at the IR, and you look at all of it, and they start giving it away. Well, this guy wouldn't do meetings with them, okay? It would just be him. And I won't say who he was. All of you in the hedge fund land know exactly who it is. And I would look at him, and I could not tell. I'd walk out, and he's obviously lying. But if you were looking at him, you couldn't tell he was lying. And it's terrifying to me that I can't tell when somebody's lying. So it was off my list. I won't trade this stock.
Just like anything
but
else,
now
like a very,
we're long list.
The more reps, the more experience, the more confident you are in doing one thing, in this case lying, it just becomes, it's very hard to tell the difference.
It's horrifying. It is horrifying
crazy.
to tell. Like management of Carvana.
Oh.
Holy crap. I mean, horrifying, total liar, incredible liar, what they've been, in my view, my personal.
Well, MPW, you watch.
MPW is just Fast Eddie.
Yeah.
But that one, that's even harder to lie like that, because he'll just lie to you, and then you literally have the cue in your hands, and you're like, yeah, but what about this? And he'll like deny it, and it's in the queue. This is like it's what no.
K's and Q's, your SEC filings.
Just that one, but that's what we always have to be worried about. Hedge fund managers and so forth is management that are unbelievably good at lying, and they don't sweat the heart rate. They are sociopaths, and many are, but those liars, like the ones at Carvana, are just astonishing.
Okay, so we got new products, geographic expansion, management, change.
Management turnaround, roll up.
Not all roll-ups are good.
Not all roll-ups are good, but it is something that you have to investigate, especially in healthcare. Roll-ups are rare in healthcare. Unlike many other spaces.
So roll up in healthcare, you get all the synergies. You can fire people. You get margins.
That's as simple as that.
Yeah.
But they're rare. They're rare. Well, when I say rare, they're rare that is the business plan. For instance, many of the HMOs have effectively health maintenance organizations have been roll-ups, and now they're about done with that sort of roll-up because everything's been rolled up. And there's a lot of synergy to be had there. The same 50 people can do the same job as 200 people at the other company. And so you're going to end up having all this latitude to cut costs and so forth. And then lastly is your favorite valuation. Too cheap to ignore. And I hate that long thesis. It is my least favorite. And every single time an analyst would come to me and lead with "this is too cheap to ignore," all I'm thinking in the back of my head is, when can I fire this guy? And that's really it. Oh shit! Like they'll say, and I remember it. So there's only been a couple instances of analysts that came to me and led with that, and I realized it was just buried in the back of my head. Oh crap! I'm gonna have to fire this guy. Yeah. Shite.
It's like the old Marty Whitman used to say, a bargain is no bargain that remains a bargain.
Yeah, that's the whole trick.
But there are valuation with a catalyst is what we look for.
Yes.
I mean, if there's a something like that, and I don't. But really going back to my former self and all the mistakes, again, valuation being the primary one, what you really have wrong are the numbers that you're calling it cheap on, right? It looks cheap because you're using the wrong fucking numbers. I mean, that's what I've told, I don't know how many analysts. I haven't had to fire, fortunately, many analysts on the buy side, but I've seen many people get fired. And they're generally value trap types that blow up routine.
That's right. Yeah. I've had to let go of 2 analysts, so it's a very low number. For this reason. They fall in love with value traps and they can't stop.
Yeah, so you have these 5 different kind of caricatures of ideas. How do you put macro on top of that?
Well, usually I dial your phone number, and I have a handful. It's true. No, it is very true.
He does call me.
It is very true. So I have a handful of people that I use. That are friends, and now very good friends of mine, but it's a very small handful to understand the macro. And I'll mention one that's not really a competitor of yours, and you probably know him, Julian Brigden. Brilliant guy, runs a small macro shop called MI2. And
buy side or
sell side, and he's a wonderful guy. and he is the king of chart porn. He looks at stuff that well, Mike, have you seen the correlation between yen and rock salt? And they'll have a chart for it, and I'll say, holy crap, you're right. And that fills in something that isn't your bag. That's not your bag. But I have to look at, in my job, I have to look at everything and understand it. And does it make sense? Is it viable? And then place bets accordingly. But Hedgeye is, and by the way, we should disclose, I am a paying customer of Hedgeye. I'm not paid to be here. I pay you to be here. So, that's it. But I'm not buying lunch.
And full disclosure, I personally own Pink. It's in my long-only account. It's in our, but I own it because I make money. I mean, I wouldn't, actually, there have been plenty of times that I've sold it, right, Mike? I mean, it's not just on the signal, and then I bring it back, and sometimes I get it right, sometimes I get it wrong. But staying with it over time has been the right thing. Let's do some macro. I mean, what's on your mind right now from a U.S. We'll do China, we'll do other things, but I mean, what do you think in the U.S. from here?
Well, the funny thing is about recessions is that it's never a secret. It is a storm that comes and gets closer and closer and closer, and then everyone takes a jump into denial and takes a swim, and then all of a sudden it's here, and they say, yeah, but it's all priced in, and they're going to cut rates. And this happens every single time. And then the numbers get worse, and they say, well, they're going to cut more rates, and then the numbers go, and then they start laying people off. And we're at the cusp of that, start to lay people off part right now. And that's the dangerous, difficult part.
The labor data, I mean, there have been rolling recessions, never mind around the world, but parts of the economy, obviously, and in corporate profits, depending on what spot you're looking at. But talk a little, I mean, the labor, a lot of people are telling me, oh, look at labor, this is new that it's slowing. It's been slowing for a while.
Years. Yeah. Years. Yeah. And it's been confounded, though, by MMT. And that's just parachute drops of cash on the public, which we are enjoying right now, even though many wouldn't say so. I say yes. When the government is spending 40% more than it takes in tax receipts, that is MMT. It is getting drilled into this economy, into people's pockets. And we are spending unlike any other time ever. And it's not that spend has to end, okay? It's just that the comps have to slow. And unfortunately for next year, they're looking at about a $400 billion increase in coupons they have to pay out. And your good friend Mike Green and I have an ongoing debate about that $500 billion. He says, well, it goes into the economy, so who cares? It's just a coupon. And my argument is, no, that coupon payment actually goes to pension funds with a longer duration of payout. It doesn't go directly into people's pockets like it does now. So we're probably walking into a $400 or $500 million spending hole that isn't going right into the public's pockets.
Well, it goes into goes in my pocket, goes in your pocket. If you have that position, but
yes,
over 50% of Americans don't have any savings. Never mind, are going to earn any interest on it.
That's a piece of it. The other piece is the duration. A lot of time, these debt things that they have, like sovereign bonds, the duration is, well, you're not going to spend that. You're going to spend that when you start getting your distribution, when you retire. So at some point in the future, you're going to benefit from that, but not next year. And so we start running into a problem with next year comps.
Yeah, let's go to, let's just show what Mike just said. I mean, slide 86, guys, this is showing you what has been, like, again, this goes back years, right? We'll say years being back to 2022, where all of a sudden you started to see the divergence between the household survey and the establishment survey, right? Then the whole state of California told you, oh, it was all a lie on the actual reported numbers. You've had to restate the non-farm payrolls numbers 11 of the last 12 months.
Yes.
So it's not like that hasn't been happening. So when we talk to clients about this, we're like, no shit, Sherlock. I mean, this is like, actually, we don't call them that, but I mean, we'll say, I would never do such a thing. But on slide 87, like non-farm payroll versus things that you and I were just talking about before we went live, like includes like a lot of different things. Let's just look at every other thing. When you think about that on slide 88, you and I were talking about if you look at temp or you look at overtime or you look at full-time versus part-time. I mean, these numbers have been collapsing.
Yes, and now you see it in casual dining.
Right.
Right. Now we're seeing it. And we're seeing it in credit growth. You saw Ally's numbers yesterday. They have a problem with defaults going up, edging up towards 5%. And so now they're clamping down on who they're issuing credit to. So the credit growth is slowing. That's what happens just before things really roll. Once they start squeezing on the credit allocation while these sort of defaults are going up. I mean, for instance, if you look at auto defaults, 90 days, over 90 days, we're up at about 4.4% right now for defaults in autos. I mean, these are very, very, very big numbers that nobody's paying attention to. Of course they don't pay attention to this stuff because they're not allowed to.
No.
You're not allowed to pay attention to this stuff. You only pay attention when stocks roll, and everyone's plan is, well, that's okay because I'll get out first.
Yeah, well,
And
now
that's
they have, they got, it doesn't take long. I mean, 11 of 13 economic data points in our 30 data point features in the model, in the quads, negative in this current month, so the rate of change slows. All of a sudden, voila, we got almost 2.5, 3 rate cuts priced in.
Yes.
Whereas 3 months ago, there was only 1.
Yeah, and I expect it.
Yeah.
What's going to be different, though, this cycle versus others, because they always are similar, but a bit different. Last time when you go back to 07, 08, we had a huge uptick in materials and energy and other things like that, including healthcare. But that was really brought about by China, building endless cities to nowhere. And they can't do that this time. They're out of dollars. So we're not going to have that engine pulling the world out of decline. So I think it's going to be, so what's left, it's exciting. REITs, Utes, and healthcare. And I keep going back and I'm saying process of elimination. What are the groups that are going to outperform? That's it, in my view. We're going to see those.
It's already, I mean, it's, it's right when it's already working. Like, so,
And it is.
So let's go there too. Should just go there now. I mean, huge unwinds in the hedge fund community. Everyone's long the same shit as usual. People aren't long pink XLU, which is Utes, which just gold, GLD, or AAAU, which is physical gold. They're long the same stuff. They're long large cap growth, and that really worked up until 2 weeks ago.
Yes.
So
That's the beginning.
So how, like, is it in your mind? I think in your mind anything's possible, right? Like you have one of the most open minds out of anyone I've known. Like you just compare like the yen with salt. I mean, it's okay. What does it mean? But is it possible in your mind to see the market cap weight shift from where everyone's at to utilities, healthcare, REITs, et cetera?
Yes, in part because I still think that sovereign bonds on the long end are a 10-year plus are really uninvestable because I don't know how Europe, Japan, China, U.S. gets out of this without material money printing forever.
So you go with the safe yield, which is at the corporate level. I own a bunch of this stuff, like LQD, which is investment grade credit. You trust that.
Well, no, I trust the short end of the yield curve.
Yep.
What's going to happen?
Yep.
All right, on sovereigns, so 2 years, things like that.
Or shorter.
But so far, or shorter. But so far as anything like 8 years, 10 years, I really. And we were driving up, Max and my son Max and I coming up here, and we had Mike Green on the call, and we talked about just this: what happens under a Trump presidency, what happens under a Kamala Harris presidency, how are they different, and what are the odds?
Well, let's talk. How do you think both? Because you cannot talk about the deficit or the debt without talking about inflation. If you don't have an opinion on inflation, I don't know how you could have an opinion on the other two. So can you talk about those three under either political scenario?
Yes.
And do you think it matters who is president?
It matters greatly, actually, on who
for healthcare, big time.
For healthcare, massively. And maybe it's not a reach. I think that our good friend Trump is going to win handily. I think that now the press and the polls will tell you it's close right up to the very end because they need ratings. So they're going to make it close, but it won't be close. And the question is, does Trump carry the Senate and the House with him? There's a good chance that will be the case. But that will have a profound impact on what happens. But what happens is not really going to be the spend. The spend's going to be pretty similar. It's how it's spent will be different. Tax cuts versus tax hikes, right? That's a spend, that will be different. But also, more importantly, I believe that they are absolutely dead set on pressuring China horrifically with tariffs. And that is going to have a profound impact that will be long lasting.
Well, I mean, those things in this house's opinion, the House of Hedgeye, they'd be all inflationary.
Yes. Well, there's also a line where the prices go up and then nobody buys.
Right?
Right?
No, we'll get to that. That's another career.
Exactly. That's the second derivative.
But I mean, mathematically, like in my model, it's math. Not for the next couple months. There's some subtleties in the comps, but once you get to the end of this year and turning into next, it's almost mathematically impossible for inflation to go down.
In order for us to apply pressure to China, the only way to do it is financially.
Yep.
And they are acutely aware of it. And what's very different about this new Trump White House that will be going in versus the last are the people around Donald J. Trump. The people around Donald J. Trump this time are going to be extremely competent and in some cases brilliant. They have some truly brilliant people there that are working for this effort.
Well, I took a lot, as you know, because I let you in on it. I took a lot of shit for having Vivek right there in that seat.
Yes.
And I also took a lot of compliments. I took a lot of compliments from Democrats, actually. Those who aren't, completely unobjective. But he's somebody that you worked with, on the buy side as an analyst. You was not a politician. The guy was a tennis player who, you talk about brilliant. I mean, his life story, if you take out the politics and you cut it right before politics starts, is amazing. Like, I mean, it's like, why wouldn't I talk to a guy like this? I don't care what party he's in. But he's definitely nobody's idiot. And when you talk about brilliance, I mean, is that what you mean? Those types of people?
Truly, and I mean him specifically.
Well, speak about him specifically then.
Well,
because
I knew him
at
as
least
a young
it doesn't
man.
sound like I'm pumping the guy's tires.
No, I knew him as a young man. He's in our club.
Yeah, he's a lot younger than us.
It is a small club of scientists turned business people. He knows how drugs are developed. He knows mathematics at the highest level, and he's a friend. And I feel so good to know that he will be there in this White House as a calm hand, a thoughtful hand, and one that can get things done in a big way and really understands the game, because he's a tremendous salesman. He's tremendous with people. He is articulate and brilliant. It is very, very rare to have all of those things jammed into one person. On top of that, sensational at math. And when I say sensational, I mean world class. Looking at raw data and knowing in the back of your head what the standard deviation is, just looking at the raw data. And you can do that. It just takes a trained eye and a mind to be able to do that. And that's how he will look at stuff. Because that's how we look at stuff. It's just rare, and it's an honor to be his friend. And he's a good fella.
Yeah, like when you put that in compare and contrast, I mean, I have no respect at all for a guy like Anthony Scaramucci, for example. And I'm not afraid to name names or say that. I mean, it's just that, even look at him today. He hates Trump, I guess. But the Mooch versus Vivek, that in one just proximity to the president comparison is something that, at least for a capitalist, is exciting. And that's not saying I'm a Republican, because I'm not.
Vivek plus an 18-pack of Schlitz, one hand tied behind his back and one eyeball. I'll bet on that guy.
Against the Mooch.
The Mooch.
I mean, it's just, and the Mooch will be complaining about them. It's just like, we do need to, when's the last time, I mean, really, like when you think about these yo-yos in both parties, I mean, that you've actually had somebody that you're like, wow, he actually gets what we do. He understands the market. Vivek would also tell you the Fed is if it was up to him, they'd be in a hell of a high level of hot water.
Vivek and I talked about this at length because...
But the Fed?
Well, no, about Trump and his candidacy.
Uh-huh.
And this effort is that they've run out of tricks to wreck him. Whether it's that they spy on his phone calls and his campaign illegally, or they take his businesses away in New York illegally, or they charge him for a myriad of counts, whether it's documents or payoffs or whatever, illegally. And now it's all coming out. I said, now we're in real trouble. And what we have to watch for is his Secret Service detail, because they're running out of options. So for the opposition party, they cannot let Trump into that White House. The moment he walks into that White House, now all the digital information of the correspondence between the FBI and the IRS and everything else is now known to those incoming. And that is unbelievably dangerous to them. So they cannot allow Trump into this White House.
So do you think there will be another assault on his life?
I hope not, but it is something that we talked about. And that fella, Trump, is literally the luckiest guy on earth. That he moves so much when he's speaking, it saved his life. He's so animated, because his heart's in it, that a fella couldn't focus in on his head because it was moving so much. Half inch the other way would have blown half his head off. Wow. That's incredible. Horrible, but stunning. And stunning that, weeks beforehand, we were having a phone call talking about just this. And very, very upsetting for me that it comes to that. But Vivek does an incredible job, like we do in the hedge fund community, because he is successful at this, is thinking about incentives. What are the incentives? What are their dangers? And what must happen? And I am not saying that there is a giant conspiracy to create the demise of Trump in that way. I mean, there is, but no, I'm not saying a murderous conspiracy. I'm saying that that the Secret Service detail was liked.
I think she just resigned, by the way.
Oh, really?
As we were coming in
Yes.
here.
Well,
I'm not sure if it, what the name is, or if I even had that right, but I'm pretty sure there was a resignation. And it's that. I just, what if we get beyond that? What if he does walk in that office?
Yeah.
I mean, so how does healthcare trade? I mean, healthcare has been one of the sectors that, again, it has not gone down either as, after he got shot or after Biden, left the race. I mean, healthcare has just been steady Eddie. So the sector, I know certain stocks have traded very specifically on the differences between the two administrations, but go through why that would be bullish for healthcare in terms of the stocks.
It's very bullish for healthcare, because healthcare does best when it's left alone. And I don't believe that this is a key item on Trump's platform. Healthcare is working well. It's never perfect, but it is not an enemy.
Like you wouldn't get rid of Obamacare or whatever, anything like that?
Yes, I don't think he wants to. And the reason is, yes, it can be improved upon, but he's got so many other things to deal with. And he only has 4 years to do it. So I actually think healthcare materially outperforms because he has so many other things to do that are more important than that. So
you don't regulate it incrementally and you cut their taxes. There are two very obvious things.
That's easy. Or just does nothing. Nothing's fine. I can outperform with nothing.
That's
right?
good. I like
so
that.
I can do that. And that's what I'm very excited about healthcare, because whereas the opposition, Harris, would like very much national health care and to unionize all doctors and nurses into a federal union program so that they will never, ever, ever lose an election again. I mean, that's really what their goal is in healthcare, is to nationalize it so that they can own all of those workers. And and I learned that from Hillary Clinton's campaign 20 some odd years ago.
Lovely.
What their real plans were for healthcare and why.
So what does Vivek do on, take either topic, China or the U.S. debt?
The U.S. debt, well, the continuing resolution, so we don't have a budget, and we haven't for a long time. That calls for a 1% increase year on year. I'm not sure that that's really going to change, and it actually has a lot to do with how the House and the Senate fall in the elections. So I don't really worry about that being more or less. I think that will be pretty much the same. But what Vivek specifically has to do is a lot of jobs. He has an incredible number of jobs moving forward. He's going to be wearing a lot of hats. I can't talk about what specifically it's going to be, but it will be extremely meaningful. And it'll all become much clearer in the front half of next year.
How about China?
He will play an active role in China. He understands distinctly the incentives. And the incentives are, very simply, she needs to stay in power. Because the whole thing about being the king is being the king, right? and he's in a real trouble. And so what you've seen him do is classic Venezuela trick, where you take out all the corporate leaders, you start nationalizing, and I expect that to progress, which will hurt them economically more and more and more and more as they go on. But he doesn't have a choice. It's the only way he can stay in power. So really to exact pressure on them to get them away from being allies of Russia is with tariffs, and they will cave very quickly, probably.
So there's a lot. I mean, you talked about 3M. I mean, industrials are breaking out despite being in this. I mean, by the way, industrials do work in stagflation because they get pricing, right? The whole point of stagflation is that we, the asset owners, get paid, and you, the people, pay the prices, right? So
they can hold their margins.
Yes. Yeah. So there are a lot of, Van Sciver's nailed a whole bunch of industrial names that are, if you looked at them, they'd be like, wow, what kind of a cocktail is that? It's like we used to call that swamp water back in the 80s. But I mean, it's like they're working, and they all have that in common. They have pricing power, margin expansion, and even if you have a recession, it's not the kind of thing that you're scared of as much.
Yes.
So anytime you say tariffs and you think reshoring or you think anything domestic manufacturing, industrial, we're coming out of an industrial recession. That's the other thing, really easy comps.
Well, I think we're going to get, at least for the next 6 to 8 months, a real stock pickers market, which I'm very excited about.
Well, it started. A lot of things are working.
For instance, in cyclicals, you can look at John Deere, which is a great American story. They sell everything to farmers and more. They've had tremendous pricing power through modern monetary theory, and they're in serious trouble right now, largely because of external global factors, such as Brazil being able to now deliver corn. They didn't have an adequate rail system ever, and now they do, so they can deliver corn on time, and you've seen corn prices plummet.
It's been great shorts.
Yeah, it's been a great short. Yeah. It's been a great short. Well, this has a direct impact, a huge negative one, on John Deere that is not growing their backlog, and they're going to lose pricing power, like right now. So that's going to be a trade. Next year is going to be fascinating because all the U.S. farmers are going to lose their shirt on corn. Right now, it's not even profitable. They're going to lose money on their corn crop, and they're all going to do the really smart thing for next year. We're not going to plant corn. We're going to plant soy, all at the same time. I'm telling you right now, that's what's going to happen. And so you can turn around short soy.
Yeah, we shorted it today.
Oh, you did?
In real-time alerts, actually.
I did not listen to the call today. I was driving up, but and this is the things that I look at. Even though I am a healthcare guy and I do a lot of clinical analysis and that sort of stuff, I'm looking and thinking about the incentives and what is going to trade. And so I think that John Deere is in serious trouble on an alpha basis, meaning you can probably short that versus things long. No, I don't have a position in it in pink. That's although
the inverse Deere.
I may on the other side. You never know. But idiosyncratic situations that'll happen around a Trump presidency, things like PCT is going to this movement to recycled everything is not going to stop. For carbon purposes, for that footprint purposes, and for marketing purposes, I think that PCT is going to be a big winner. One thing that just occurred that the street is probably just finding out about is pricing. And this was one of the keys that I thought to PCT, is that it's a monopoly. There is nobody in the world that can make recycled polypropylene. There's 170 billion pounds of polypropylene made. Almost none of it is recycled. And this is going to be the only game in town for as far as the eye can see. And they have a new mechanism on how to go to market for this. One of the problems starting off with a small player is, well, what can you make? 100 million pounds. Well, BMW calls, Procter & Gamble calls. Well, we need more than 100 million pounds of this crap, okay? It's nothing. And then you think about a shampoo bottle. The problem is, like, well, yeah, we want all of our shampoo bottles recycled. We want to put it on recycled, okay. PCT can't deliver that much. So say they deliver 20 million pounds to Procter & Gamble, what do? These shampoo bottles are recycled, these are not? Well, we got to keep track of that. We got to label this. We got to do that, not that. And they said, wait. Why don't you just deliver us as much as you can make and blend it with other polypropylene, and so it comes to us 20% recycled material. Now we can put it all in all of our shampoo bottles, and that's their go-to-market strategy. Here's the catch, though, is that PCT is going to be able to charge about a 80% or so markup on that as a whole, rather than just their wedge that's recycled. That changes everything for them.
What's to guarantee the capacity to one? Is that how?
Well, they want, yes, and it is really to guarantee that, well, it won't all be recycled, but now 20% of all of our shampoo bottles can be recycled, put the sticker on and all that sort of thing. But they can guarantee, so out of this plant, instead of making 100 million pounds of pure recycled product, now they'll deliver 600 million pounds of a blended product. So now you get 600 million pounds of this stuff you can deal with. That's not a huge number, but it's a great start. Mm-hmm. And so now companies can run their whole lot of this, and that's a big deal for them. And this is something that I had envisioned would happen, and I'm very pleased that it is happening. And we'll learn more about that on the quarter. They've talked about it, they had a press release about it, but I don't think that people understood exactly what this means. Yeah, when you bring the numbers through and start figuring out the model for this story, the profitability on that alone more than doubles.
Model? Model?
Right. We are friends with Excel. Not friends with Microsoft, but friends with Excel. Also, so that is a Trump trade. They are going to be pushing for recycled materials.
Mm-hmm. See, it's the creativity of the Mike Taylor mind. It's just like unparalleled. People, and there are a lot of you. Just to admit it, when Mike first pitched PCT, you probably bought it because a lot of people, they just look for picks. Right? They flip around from Motley Tool to wherever, and just give me a pick. This game is like, in particular, as Mike just walked through it. I mean, he looks for 5 different kinds of things. This was the first thing he said: new product, right?
New product story, pricing power.
Yeah, new product story, pricing power. This is what he said.
If I can find that all day long.
But it popped out of a real conversation. I bought it. Now it's down. And Mike, I want to ask you on Twitter about it every day. This is a new product solution. It's a company that takes years, half of a decade at a time to manifest. I mean,
yes.
it's the day and age we're in, right?
Yeah, and pay me now.
Yeah, you got it. It's just the chart. I mean,
and I apologize. I got it wrong. The stock had been a dog. It got all the way down to $2 something, and disclosure, I own a lot of it. A lot of it's in pink.
Where is it now?
Around 7, 6, 7, something like
so it's
that. They're starting to figure out this pricing thing, and they'll understand it more on the August call. And it's going to be, so remember, the next phase that they're going to build are plants that are 8 times this size. Yeah. So we're not talking about $500 million in revenue. We're talking about billions and billions and billions of revenue. In Europe, they have a tax on plastic. So this avoids that tax. Mm-hmm. So there is tremendous incentives to this to be a very big idea and multi-decade long.
Yeah, and you've said that from the beginning, and I appreciate that because you're such a sincere guy and you do feel bad for people when they lose money. But apologizing, man, I mean, it's like, this is the game, you know? You and I have opened up, to the people, and we're like, okay, look, here are our ideas, here are our portfolios, here are our picks. But I don't wake up in the morning like wanting to. This game is hard enough. My hair's gone freaking white since I was the OG troglodyte.
Consider dying?
Yeah, I have not, but I will not. I've told my wife I will not, because maybe she suggested I should. But it's like the job has enough embedded stress as it is than trying to take on everybody else's baggage, right? Like a stock pick shouldn't be frickin' 25% of whatever portfolio. That's not a portfolio, what you're doing there. You're just gambling, right? So sizing it properly. I mean, how big is PCT in pink? What percentage of the portfolio? Are you allowed to say that?
Yeah, it's got to be around 5.5.
Oh, that's pretty big.
Yeah,
but I
well,
mean,
it doubled.
It doubled,
or more than doubled.
Right. So, but that's not. I mean, that because it grew into it.
Yeah.
But I often say to people, I mean, just like 2 or 3% max to start.
Absolutely.
You know, like what are you doing? I mean,
Yes.
you know, if you want to be Bill Ackman, you know, you can go 25, 50. You know, look how that ended. I mean, it ended in him being, you know, in his own mind, he's the world's brightest politician.
But what's fantastic about that is that for him, it actually ends almost every 3 years.
We laugh like people.
And we're back.
The lemmings, you know, that follow this guy. It's like Valiant. Did you see what happened there? I mean, hello.
It lives in my memory.
Yeah, you were short Valiant.
Oh yeah, yeah,
I mean,
yeah.
Let's stop with him. It's
Yes.
wasting our.
It is a waste of time.
Precious life
But
and
there's
sacrifice.
going to be a lot of trades. Like for instance, let's
So we have
keep
PCT,
let's keep it dumb.
3Ms, SRPT.
Yeah, deer, you know,
Deer,
but
short
not
set.
really in pink. But think about Vivek, smart guy, right? He's a smart guy. He'll know that this vaccine thing for COVID is total nonsense at this point. Myriad, or not Myriad,
Pfizer?
Myriad's a long, but mRNA. mRNA has still the vast majority of the revenue moving forward is COVID vaccines. And there's going to be no mandate for this crap.
That's a huge idea.
Wait, let me check. $5 billion in revenue. It's in the numbers, guys. It's right there.
Yeah.
And it's going to be like, hello? I mean, okay. Nobody knows. The stocks, you know, stocks wherever, 50 billion market cap.
You know how exciting, you just got to try to keep it on
It's
the.
like burning a hole in your face. I just said it. People are all looking on the media right now. Holy crap, he's right.
Yeah.
I wouldn't be surprised. And by the way, I don't have a position in Myriad.
But
or in
imagine
mRNA.
a world where you can send a note to somebody in the government that actually knows what it means, and his name is Vivek, and you'd be like, yes, this is bullshit. This is not good for the people. You know,
Yeah.
that to me, I mean, you know how many people just feel like that is just never going to be achievable ever again with the U.S. government?
It is a novelty. Okay, that would be a novelty to actually have somebody on the other end of that phone at the White House that says, I understand exactly what you're saying,
Yeah.
and does. So, look, the White House has changed. It is now a managerial matrix that determines policy. So whenever it's like, well, what's Biden going to do? Biden doesn't do anything. There is not one decision that is not made for him by a managerial complex, a web of interests. And this is why they are terrified of Trump. If you think about it, the largest ad buyers, because media survives on ad sales. Well, where does that come from? Most of their ad sales. Google, Microsoft, Apple, Walmart, Amazon. So who is actually really having a tremendous input on policy? Everything from China to housing to whatever, who's going to get what for modern monetary theory? Do you stop paying the student loans? That whole thing, think about it. If they got rid of the student loans, right, and this was a big policy of this White House, who benefits? Apple, Walmart, Amazon. So yeah, that's $1 trillion they don't have to pay back. They're going to instantly turn around and buy a TV and all sorts of crap. And so that's who is running this White House. I would not be surprised because of the monopolistic setup for many of these companies, of these 6, 7 mega influential companies in the media, tremendously influential. I would not be surprised to find out in the front half of the next year that some of these, the wheels are underway to break them up. And this is the first time I've said this, and I was telling Max on the way up, I'm going to get a lot of blah, blah, blah for this, but I'm saying it right now. I would not be surprised to see in the front half of next year the wheels begin to move to break up some large tech companies.
Whew. Now, if Harris wins this morning, I don't know if you said you didn't listen to the call yet, but that doesn't mean the call didn't happen. I always tell people, hey, look, if you missed it, you can replay it. It's really important to stay on top of it, just like binge watching anything, right? I mean, you need to hear the next part of the story. But Harris, I mean, she didn't just raise a bunch of money out of nowhere. It's this place called Silicon Valley, right? And there's there would be, Paul Glencher's point, who does our, who does all of our legal analysis and whatnot, and all the kind of litigation risks or breakup risks. He said that she would be a little bit more accommodative to that not happening. Whereas Trump, you're assuming Trump.
Well, if you want positive press, you got to play their game.
Yep.
And this is why Trump is so unbelievably dangerous to all these interests.
Yeah.
There's no game.
Yeah.
There's no game.
Well,
This hasn't happened since Eisenhower.
Right. This is why, for the record, I don't like Donald Trump. I mean, but I like that. And I think there are a lot of people that don't understand that people vote for Trump because they don't like what the state and the elites have turned this country into. They know that he doesn't have a raft. He doesn't have all, like you said, what'd you call it?
The managerial machine.
Yeah, this is like, it's like right out of Atlas Shrugged. I mean, so, that to me is exciting. I want to be excited about the future in America. I don't want to be like, oh my God, here we go again.
No matter what, there's going to be an enormous number of trades. Okay. Yeah. And I actually do like Trump, but for the purposes of pink, I am much better at trading that than I am anything else. Because out of this current White House, I have no idea what's going to come out of their mouth and what their policies are going to be. But I do understand Trump because they really work off of incentives.
Yep.
And to me, it's much more logical than others. And I'm excited for these changes. I hope very much he makes it to the White House, very, very much. And my heart is out to all the people that were injured in this recent assassination attempt. That was terrible. It
was brutal. And I appreciate you having the courage to say what you think on that. I mean, it's not like, I by the way, I don't like Trump, I don't like Biden, I don't like most politicians, if any of them. So the fact of the matter is that that's how disgusted people are like me right now, that they're just like fourth turning. This is going to end very differently than people think. So it's a thing. And I like how you help people. We're up on the hour here, but how you help people make money on that, right? Because it's not about getting your politics right. It's not about getting something intellectually right. It's, as Mike Taylor says, it's all about making the money.
And this is what I love about Hedgeye, because I really think it is an incredible effort to educate, make traders better, and make people more thoughtful, and to make money. And it's wonderful to be able to help out in any way I can, just like Pink. Because at the end of the day, all that we get are the things that we've done for other people. That's it.
Yep. Yeah. God bless you for saying that. When we're all, at some point, we're all going to be on the wrong side of the grass. And as my grandfather told me, c'est l'image, or it's like the image that you left in people's mind of what you accomplished. C'est ça, he said. C'est ça en français qui compte. That's what counts. Mike Taylor gets that. Thanks for joining us. We appreciate it.